take a look at some important commentary that's coming in at the HDFC Bank group events. Sashidhar Jagdishan, HDFC Bank MD and CEO, emphasized the company's steadfast commitment to bottom line growth represented by EPS. Now, he also shared how the company is willing to go slow but steady to navigate the post-merger era for the bank. He also commented on the Paytm saga and how following regulations is a must. Listen in to what else he had to say.
So this is the period of transition we will have to adjust to. And so our anchor is that as a company for 29 years, we have always been consistent on the bottom line growth, which you can call it the earnings per share or whatever that is. And going forward too, we will have that as an anchor. So a lot of other metrics you may want to sort of ignore because of the transition, especially on the loan growth. And that could be a tad lower, but that's all right. I mean, that is something that is not going to be at the cost of my earnings trajectory. We're not in the quantity game at all. We don't want to grow just for the sake of market share. Very clear, this is not a new philosophy. This is a philosophy that we have been building our franchise over the last 30 years. And we're proud of that, but we're not going to be compromising both on margins and risk. So there is a certain trajectory that we will operate, a band that we'll operate, whether it's a margin band, whether it's a ROA band, and that is something that we are very particular. If there is some kind of a disruption there, happy to go slow. They do have a great tech platform, and that is what we have a partnership which sort of harnesses that. And it's not a big thing. As I said, these are experiments that we are happy to sort of continue as long as we maintain control of the regulatory norms, etc.
Let's stay with this then, and my colleague Ankur Mishra is standing by with more details on what the management had to say as well.
Yes, important commentary coming from HDFC Bank MD and CEO regarding margins as well as growth. On the margins front, it has been mentioned that the bank is not going to compromise on margins as well as risk. In fact, he has mentioned that they plan to operate into certain band, and that will continue as far as margins and ROA is concerned. If there is some kind of disruption, the bank is happy to go slow, and that has been indicated clearly by the management. Also, MD and CEO has mentioned that as it has been the case in past 29 years, there is some time where the transition is happening, and this he is referring towards the merger of HDFC Bank and HDFC, and as the bank has been consistent in the bottom line, and similarly even in the quarters to come, in the road ahead, the bank wants to be consistent as far as earnings per share is concerned or the bottom line is concerned, and that is not going to get compromised as it has been the case with the institution in the past 29 years. Apart from that, important comments also coming in on the Paytm front as well, whereby he has mentioned that Paytm has been an important entity as well as partner regarding the future partnerships. He is saying that as far as regulatory approval goes, he would want to explore that, but any opportunity will not be for the sake of it. He mentioned the case of FASTag, he mentioned the case of merchants acquisition. There is an opportunity for the bank, but not for the sake of it.
Okay, thank you so much for